jump in. We're gonna
Let's do it.
First thing on there. This is Hard Money 101, guys, and also with a side of market activity.
Yes. So welcome. Thank you so much. I know it's a Wednesday. We normally do these classes on Thursday, so I was about to say Thursday, but it's a Wednesday, and I just really appreciate you taking your time and learning and wanting to grow with us. So thank you. And Greta, could you do the next day?
There we go. Guys, so I am Chris Burdick, the Rain City capital of Oregon, serving Oregon, Washington, Texas, Tennessee. Been in hard money lending for 25 years. And a lot of that time also been a real estate investor myself, done all kinds of different things with Rain City. The 58 million, and just happy to present today. Real estate is a real passion of mine, and I am always so honored to have Lesa Say in here. She is amazing and so fun, and you guys get a lot of value from her too as well.
Oh, you're so sweet. Lesa Say, I also I would rather do classes with you, Chris, any day than myself. So thank you for having me. Thank you. My name is Lesa Say. 16 years of real estate. I've been with Rain City. It's almost 5 years. Absolutely. Yeah, right. In December. So I'm really excited about that. Both Chris and I can help anybody out in the states that he mentioned before. And real estate is a huge passion of mine, as Chris has. We both have rentals, short-term rentals, flips. So we come to you today as, yes, we are a hard money lender, but we're also two that are active members in either flipping or holding properties and just trying to invest just like you guys. So we definitely don't have a crystal ball as we talk about the market, but we definitely have many years experience. We've seen the real estate cycle. We've lived it, and we're just here to share our knowledge and what we're hearing on the street, and also what we've experienced. So I hope you guys enjoy. So let's start. Let's talk about the elephant in the room, if you want to say, is what is this market doing? I always love to just take a deep breath and think of like the real estate as a whole. The real estate market is a cycle. It's always been a cycle. It goes up, it goes down, it goes up, and it goes down. And investors can be successful in any cycle as long as they are understanding the cycle, they're smart about their decisions, and they have liquidity to hold and back up their choices. So it's really important to say, what is the market doing? What's my goal in real estate? How am I going to achieve it? And what am I going to alter or adjust with the current market so I can be successful? You need to be more conservative. And why do you need to be more conservative? Is 3 years ago or 2 years ago or even 6 months ago, we could have said, hey, yeah, this house is going to sell for $450, and in a week it's going to sell for $500,000. That's just not the way it is now. Houses are sitting. People are not as competitive, but we still technically are in more of a what you consider a seller's market, meaning there's not a lot of inventory out there because people are a little scared to be putting it on, because they used to, maybe could get over asking because their neighbor down the road got over asking and now they're not going to get it, or could I put my house on the market? But all of that still isn't a reason not to buy real estate, because people are buying. People just need to adjust to what they can afford now, and that is what they're doing. The cycle that I mentioned before is real estate has always had a cycle of November, December, January being the slower time in the market in itself. Guess what though? That's the best time to buy in real estate, because you get it fixed up and you get it on the market in spring. So knowing how the cycle curves naturally and when to buy is also important. So I would say is, yes, the market is shifting. It has shifted. It's going to probably maybe sting a little bit more, but what can you do to be successful in this shifting market? Because I'm telling you, Chris and I both have tons of people that are very excited for when it even dips a little more, because they're ready to buy, because this is the best time to buy when it is going down, so you can make the money when it's going up versus the other way around. So do I think there's a crash? No. And Chris is going to talk about it too. We both lived and breathed 2008, 9, 10. It's just a different market than that. People have jobs, people have job securities, all the areas that you guys are in now. Thank you for everyone that's listed where they were in Texas or Tennessee, Oregon, and Washington. These are all stable markets that have a lot of big companies coming into them. So that is beautiful, and that shows that they're stable. That area is stable. So knowing the areas that you're going to invest and why people are buying and why are they moving there is great, but also having a plan B. And plan B is so important. And Chris and I will be talking about, what does plan B look like? 6 months ago, you didn't need a plan B. You know, you put it on the market, it was going to sell. But now, what if you have to hold it? What does that look like? And what does that look like for my budget? So in a nutshell, like that's what I see the market and the market shifting. And that's okay to be shifting because it's also natural, like cycle of real estate goes up, goes down. So Chris, do you want to add anything to that? What your thoughts are?
Yeah. I think you're nailing in terms of like at all stages of the market, there's good opportunities to buy in every stage if you know how to strategize correctly. I'll share a little bit about what I'm seeing. I mean, part of what Lesa and I do on a day-to-day basis is we're being pitched these different deals, and people are showing us different deals. We got borrowers that we're doing, we're both doing high volumes of loans. And so we see a lot of transactions, a lot of deals coming across, and also we're tracking our borrowers. What's going on in the marketplace right now from a lender perspective is that hard money lenders in general are getting a little more conservative because there's some turbulence in the market, right? We don't really know what's going to happen 6 months, 12 months, 18 months down the road. So in that kind of unknown, hard money lenders are a little more conservative. You see, rates came from like, it used to be at 8%. Now they have a floor of 10, and they used to be, we would, you see a lot of these 90% loan to cost things, and now it's more like 85. So they're getting a little more conservative in the number because they want to try to manage the risk factors. And what I'm advising on my clients, and I think Lesa is kind of in the same boat with me, of like, what we're seeing is increased price reductions right now. So when you're pricing your flips, make sure that you're going a little conservative in what you're going to sell it at. Like, don't swing for the fences. Now is not the time. 6 months ago, 12 months ago, I'd be like, oh my gosh, go for that high price. You'll get it. And they'd get it in a week. But, now things that are priced too high are conservative. So I'm saying, be a little aggressive in your sales price, come a little lower, like find the low bar of the market, just get it sold. I'm also telling people, that be thinking about if you had to hold this property, and we'll get into that too, could you keep it as a rental? Could you, just do a bridge for a while and hang on to it for a little bit? And what does that look like? So, be thinking of these things as the market is shifting. Add these things into your strategy in terms of how you're doing your investment analysis.
Absolutely.
Anything else, Lesa, that I missed? Or
no, you didn't. The biggest thing is everyone, they want the crystal ball, right? And you touched on it, is you and I, we talk to lots of different investors every single day. Like, we do a lot of transactions, so we get to hear what people are seeing, what people are feeling, what kind of deals are coming in. We do see skinnier deals now, but we're also seeing people that are being wise and being more conservative with their numbers versus more people are like, I'll take a little risk. So it's always more important for you to communicate and talk with your sphere. Like, what are people seeing? What are people doing? And, but also talking about the people that are actually doing investments. Like, not just people that are hearing what's on the news, but what are people seeing in the grounds? So I definitely think you're absolutely correct that people are being a little bit more sensitive.
One more thing I was going to add. I'm starting to see more people teaming up a little more. And so they're partnering up with other investors. So where you used to need, this much money to do a deal, now it's like they need a little more money. And so what we're seeing borrowers do is getting creative, right? They're thinking, okay, I'll team up with this person over here, has a little more cash. We put our cash together, we can take down these deals still and do these deals and have a little more capital. So that would be something to think about in this shifting market. is finding partners to partner up with. Anyway, I'll shut up and go on the next slide. We can go
I know we can
forward.
talk about this one. We're
I know.
going to be talking about the market within each slide and kind of how that's going to help with knowing how to structure your deal. So we're not done with talking about the market analysis. That was just our high volume, high looking at it as what is the market doing right now. So
Yeah,
definitely, because let's talk about rate increase.
yeah, guys. So this is really cool. So we put this slide in here. This is about rental appreciation. So when you have rentals, or if you're interested in rentals, both Lesa and I have rentals, and so we love this stuff of like, oh my gosh, look at these rent growths, and then that Q over Q percentage, that's Q2 to Q3, and so you see the growth, mainly growth in that category, and year over year change. What you're seeing is a lot of people that can't afford to buy right now. So it's putting into the rental market, and so you're seeing an increased demand, and that is showing in more rental increases. So of all times to be a landlord, now is a great time to be a landlord. You're sitting with this massive housing shortage, and the affordability factor is kind of in flux right now, and rates went up, and so I mean, if you can get into rental property and get into that, I strongly encourage you guys. I'm a huge fan of this, but I thought this was cool. Whether you're in Oregon, Washington, Texas, or Tennessee, all these places are seeing these big shifts. Look at the one in Texas, Amarillo. Year over year change 33%. Renton, Washington, 28%. I mean, or Knoxville and Nashville. Those are huge gains. That's 1 year of rental increases. In Oregon, if there's any Oregon folks on here, I don't know if there are or not, but we have rent control here. And I was super excited to see the rent cap go to 14.6%. It's typically around 9-10%. But because of the inflation rate that is going on in the marketplace, it's a bigger increase, which is nice for landlords because costs have gone up for repairs and taxes and all kinds of things. Oh my gosh, we're all paying a little more. So commensurate with that, you've seen, the rents going up as well to match that. And so anyway, so I just wanted to show that slide. You guys have all thought about having rental property. Be aware that this is what's happening in the marketplace right now in rent. So it's a great time to own property and be a landlord.
Yep. And
Lesa?
one thing to mention on here too is when I talked about having a plan B, is this is it. And this is what's important, why we're showing this slide, is when you go, nope, I'm going to flip this. But what happens if you can't flip it? What is my rent going to be? When the rates were at 3%, there was a lot of first-time home buyers, more than there is now, because now the rates are what, 6-7%. So that margin of those people that could qualify for a home loan and purchase can't anymore. Guess what they're going to do? They're going to rent. And that's where an investor has the opportunity to be successful on it. So maybe not a flip, maybe you should keep it as a rental. So definitely chat with whoever you're talking with a deal and see what your plan A and your plan B can be. So this is a great slide.
Cool. All right, next one on there. Let's see.
Yep. Hard Money 101. So this is what we're about. So a lot of people here, I thank you so much for coming. Some of you, you know what hard money is, but this is a great refresher. So even if you're new or you're just starting out or you've been doing this a long time, let's just get back to the basis and teach you on how to be successful. What is hard money 101? Like, this is asset-based lending. Traditional lenders look at you as the individual. They say, what is your W-2? What's your tax returns? How much can you afford? Yeah, we care about your credit, but we really care about the asset. We look at the asset first. Does the asset make sense? Is the asset going to be profitable for you? Then secondary, we look at the individual, what's their capability of repayment and how much liquidity do they have? So hard money in an overall shell is asset-based lending. We're not a traditional lender, which we'll talk about that in another slide, but we look at the asset to make sure that it's successful. It cannot be owner occupied. If you call me and say, I'm going to fix this up and I'm going to live in it, Chris and I are going to say, sorry, you got to go with the conventional lender. So the key high level of what it is, asset-based lending, not your traditional lender. We know the house is going to be ugly and that's how you're going to make your money. It needs to be fixed up and you can't owner occupied. So Chris, you want to add anything on that or?
Nah, Lesa, you nailed it. Let's go.
Let's go to the next one.
Okay, benefits to hard money. So guys, the top benefits of money are, like, I still like the one Lesa said, where it's just like, it's low documentation, super simple. Because of that, we can go really fast, right? There's not a lot of paperwork that we need. So speed, I mean, I've closed several loans in the last couple of months where I've closed it in like, 48 to 30 to 72 hours, and just boom, 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 got it done, rescued other loans out of there because of what we do for hard money. We don't need a lot of documentation. So speed is a huge factor. On a typical, that's not normal. On a typical flip loan that we're looking at, I usually ask people about 2 weeks. If you can give me 2 weeks, it gives me time to look at the value and collect our things, make sure your budget and scope is right, and do our thing. But even 2 weeks by conventional standard is super fast, right?
Right.
So close a lot quicker, free up your cash. I think this one especially is important nowadays, where like people are using credit cards more and they're leveraging more. You know what that does to your credit? It comes down. And that makes it harder and harder to get financing on the other side for other things. So if you can work with us and do our hard money loans instead of deploying your own cash or working with credit cards and HELOCs and that sort of thing, and using our money instead of your own money, then it frees up your cash and keeps your credit great, and you have more cash to deploy on more deals. You can handle more bumps along the way. We have clients that have hundreds of thousands of dollars to millions of dollars, and they still use us to the max leverage point because they see the value of freeing up your capital. So cash is king. And being that we're not a bank, again, banks are going to say, I don't like that property that needs a new roof. I don't like that property, it's got no stove. And look at that stuff, and we say, look at the opportunity. Look at this thing. You're buying at a huge discount, and you're going to do these quick little things to spend this much money, and you're going to make it be valued this much more. That's awesome. We love those deals. So we're not a bank, and we love the diamond in the rough. Lesa, anything to add?
Nope, you did a great job on that. So no, yeah, let's just go to the next one.
Cool.
So we explained in a high level, what is hard money? Why would you use hard money? Definitely speed is huge because it is still a competitive market of people. There are multiple offers. Today there was one of my borrowers, there was 9 people on one property, and it was between me and another person that had cash. Oh, I'm sorry, 3. Another person had cash and another person was using hard money, and all of them said that they can close by the 30th. And I was like, well, let's just do it in 7 days then. And we made it shrink so we can win the deal. So cash is king, but also flexibility and being able to compete with those that have truly cash is so important, because then you can maybe negotiate something else in that deal. So it's really awesome to have that opportunity. So how would you apply? Like, what do we need? We need an application. You don't need your firstborn on those applications if you've ever tried to do a conventional lending where you have to get all your W-2s, your tax returns, lots of documentation. We literally need a bank statement showing liquidity, application that's like 2 pages. We do pull your credit. We have an experience-based lending program where the more you do, the better the rate. Or we have a very creative, which we'll get into, creative like cash collateral, land collateral, that has a little bit higher rate that doesn't need like a 680 credit score, but it does. For the more experience-based, we prefer to have a 680. Does that make sense? So the more experienced you are, the better rate you have, the little bit better rate you can get, but doesn't mean that we still can't lend to you, because we do understand that you might use your credit cards to buy materials and that your rate will go lower. So as long as you're currently current, that works. So we do your application, we get you approved. Chris and I can get you approved that same day. We then give you access to 24-hour proof of funds online. So then when you find a deal, you can get your own proof of funds. We get notified when you do one. So then we can call you up and say, hey, got a deal, let's chat about it. And then you're approved. So that's a super easy process to get approved. Chris, anything you want to add to the approval?
No, I was just gonna say, yeah, I mean, I typically do the same thing when they're signing up with us and need a POF letter and they're brand new to me. I say, do the application. It'll take you like 5-10 minutes to do. And then as long as it's business hours, I can get you pre-approved in less than an hour. My team is really fast and really responsive. And so we get that done. I've had people ask for pre-approval letters, at 4 o'clock, and we have it out by maybe 4 or 5 o'clock for that offer going out that night. So we can get it done for you guys. And then once you're pre-approved, and you want, help with a POF letter, like you can just also just like text me and tell me, hey, Chris, I got this property. Here's my sales price. Here's my entity I'm going to do it under. Can you do a proof of funds letter for me? I can bang that out in about 5 minutes. And so we can always generate those guys and they help strengthen your offer, get this good for you guys quickly. So that's it.
Okay, go ahead, Chris.
Okay, so reviewing your deal. So guys, once you have a deal in process, right? And so you've got a signed contract, the things we're going to look at, or if you're kind of vetting a deal, we're going to look at loan to value. So that's going to tell us our loan risk. We have our margins. Rain City generally wants to be, generally this 30% cushion, right? We want to have that all the time, no matter what we're doing. If we're buying the property or you're fixing it up, we always want to maintain our loan to value ratios. So we want to make sure that that the deal is a good one. And so we're going to look at things, property's potential and the value, the value that it's going to be down the road. And like, does that make sense? A typical deal would be like, you buy it for 200, put 50 into it, it's worth 350 at the end. That's got a great spread there. So we look at that deal all day long. Exit strategy. These are temporary loans, guys. These are term loans. And so a big concern for us, and as well as should be for you guys, is what's your exit out of our hard money loan? Like we have a 12-month term loan. Like, are you going to sell this property? Are you going to keep it as a rental? What are you going to do with it? And how viable is that? So we're thinking through this with you of like, okay, does this make sense? They're going to sell this property, or does it make sense that they want to refinance it? If it's something funky and we got to think about how we're going to, change the property more palatable for a conventional lender or for a commercial lender, we can talk about that. So exit strategy is also a key piece because these loans still get, and our plan is not to go on forever. Our plan is to get you out of these loans and make you some money. Expert review, our whole team, from the underwriters to processing to me and Lesa, we have tons of experience, guys. We look at these deals all day long. And so whether it's a regular bridge loan or a fix and flip or a spec deal, we've looked at this stuff before. And so we can help you kind of advocate for you and say, okay, this is good. You want to shift this and be thinking about that. And so we're there to help you along every step of the way. We're all about music success. We want you guys to find good deals and do good deals and make money. We all make money, and then we do more deals together. And so we're there to help make sure you guys don't fall. That's it. Anything, Lesa, you want to add?
We did get a question about the LTV, and in a couple slides, we're actually going to break down the LTV and how you do the math with a deal. Right now, we're just explaining what is hard money, how do you apply, what do we do next? So in the next couple of slides, we will be able to break down and actually have a deal for you guys. So look for that one. If you want to go ahead and Greta, do the next. So once you get pre-approved, you've talked to Chris and I about your deal. We've gone over it. We've broken it down. We're like, yeah, that works. We submit it. We only really need 5 things to submit to underwriting, because the beauty is Chris and I pretty much pre-underwrite your file for you. We want to make sure it's a success for you, like he was mentioning. So we're not going to submit something to underwriting or even let you get into a deal if it doesn't make sense. So we kind of already did all the hard work in the beginning. We need the proof of funds, purchase and sale. We need the renovation budget, because we need to know what are you doing to it. We need title, which you would absolutely need anyways, insurance, and a bank statement. That's what we need to get you into underwriting. Super easy. We get you approved. It goes through escrow, just like a traditional deal would. We need to make sure it transfers title, and then we fund and re-record. So that's why we ask for about a 10-day, but we can do it faster. It's pretty easy, and we will help you all the way through. Chris, got anything on that one?
No, that's it. I mean, I think, the biggest thing I think about for the 10 days that we asked for versus like a 3-day close, typically a 3-day close is like, it's so simple, right? Usually we're asking somebody else's deal where there's already a prelim going, like maybe you already had going with another lender for a while there, and you already had a prelim, or maybe it doesn't need, as much valuation, things kind of line up pretty well for the short term. But usually, we don't ask for the 10 days is because, we're asking for valuations. We need the interior access, and so you need a couple more days to do that. But even so, most sellers look at our stuff and they they're fine with a 2-week close. They just want to get it done. And people look at hard money and they say, oh my gosh, what is that? Same as cash. It's not exactly the same as cash, but it operates like cash, and then it's very quick. and it's a lot less documentation, and it's a lot easier to get approved.
Absolutely.
So.
And you mentioned something real quick before I have you go break down on this slide. You want to work with a real estate agent that is investor friendly. They need to understand what hard money is, that it's not, evidence of funds, because escrow will be like, wait, why do we need loan docs? You said this was cash. So my little nugget is you need to have a great team. You need to have a great team of a contractor, hard money lender, escrow, and also your agent or a wholesaler. All of those we can help you get. Chris and I are very connected to a lot of people. So if you need any of those, just let us know. We will help you. So
100%.
If you want to chat about a deal and the LTV and how it works.
Yeah, guys, so this is kind of I have a visual for you guys as we talk about this stuff. I'm a shoe, but I'm kind of a visual learner myself. And so I look at this, I'm like, this is great because it's very visual. So, purchase price of 300, renovation cost of 50, and ARV of 500. So you got a nice $150,000 spread to be able to cover the closing costs, some loan payments, maybe a little bumps in the road, and still make a lot of money in the deal. That's great. You don't want a deal that's kind of too skinny. If you had said, hey, Chris, I got this deal, it's 350,000 in renovation, it's gonna be worth 400 at the end. I'd be like, oh man, that's a little skinny. By the time you pay my fees and pay all this stuff, there's not enough money in it for you. Like it doesn't make sense. Why put all that work out if you're not gonna make any money on it? So we always make sure there's a good spread in these deals. You'll see on here, we got kind of like two kind of fun groups. Rain City Capital is kind of old school hard money. That's 12%. I hang my hat on that 25 years, 12%, 3 points origination. And Rain City Capital, that's where we have a little more creativity. We can do cross collateral, we can do cash as collateral, we can get creative in how we approach things. It's also where you get quicker money as well because you don't need those interior valuations as much. So with that flexibility, and of course you have that 12% interest rate in there. So you'll see there, down payments are the same between Magnolia Capitals and Rain City. Origination, you see it's a little bit different there. That's accounting for that 1 point more in origination. So Magnolia Capital is like a 2-point origination fee. Rates are typically 8 to 10%. Real breakdown in there, that 350 minus the 15% down. That means it's talking about like what is your initial loan going to look like? So we take your 15% down off the purchase price. And we're putting your money in. I kind of explain this right. Lesa, bail me out.
Oh yeah, no problem. You got it, buddy. You're awesome. It's at the end of the day, we all experience that too. So you feel free to interrupt me if you want to chime in. So let's say you have a purchase price, found an awesome deal for 300,000, and your renovation is 50,000. This is just an example. And your ARV, what is ARV? That's after reno value. The after reno value is actually what we look at the LTV, that's loan to value, off of. So we don't do your purchase price. So our max is 70% of the ARV, after reno value. So how do we get that? We take the purchase price, which is actually loan to cost. So the purchase price plus the renovation, 350. So you guys see the pencil, you see 350. You take 15% down because that's where we're at right now. We are no longer doing 10% down. I can get off my soapbox about why 10% down in this kind of market is not a good idea anyways.
Amen. Preach.
Yes. You need to set yourself up for success. And people don't want to put their skin in their game, but here's the reality is if you can't put 15% down, maybe you should go find and pair up with somebody else, because if that value does go lower, you need to make sure you have an exit strategy. So yes, cash is king. Yes, you want to keep cash in your bank, but you also need to make sure you have skin in the game. So no 10% down anymore, 15% down, which is still very easy. It's not like conventional lending that they'll require an investment, sometimes 25% down. So you're still doing great. We can put the renovation in your loan. So that's where you see the 297,500. That's your total loan to cost. We take that number, divide by the ARV, which is the 500, and we get 59% LTV. So if you remember what I said, it's 70% is our max. This is 59. So if you came to me with this deal, I'll be like, let's go. This is awesome. This is a great deal. Let's make it happen. And the two brackets where the Rain City and the Magnolia, you might be like, why is there two different names? Back in the day, we used to be able to sell Magnolia, but now Magnolia, we acquired in Magnolia. We just are kind of old school. So we keep those brackets separate. So people know, hey, this money is a little bit cheaper, but you have to fit inside the box. Rain City funds are a lot more flexibility, but it comes with a little bit higher price. Now, keep in mind that rate is annually, not monthly. So that 12% is actually 1% a month on your like a payment. And we only make you pay on what you've drawn out. That is very important for you to hear. So I'm going to say it again. We don't make you pay on your total loan to cost if you haven't drawn out your draws. So you have your acquisition price, and let's say you have that 50K. We don't charge you that 50K every single month. Let's say the first month you only have drawn 10,000. Then we're going to have you put your principal plus the 10. Some companies will actually make you starting from day one paying on the total loan to cost. So that's
right. The whole loan amount.
Yeah. You want to continue on with that, Chris, or?
Yeah. I was going to add, I saw Roberto's question in the chat there, and he talked about what qualifies for Magnolia Capital. So Magnolia Capital is purely based on a couple things. I shouldn't say we used to be purely based in experience level, but now there's also a credit factor too. So if you have at least one completed flip or at least one rental you've owned for 12 months or more, you can get like 11%. If you get a couple more, then you're going to be like 10.5%. A couple more, and then you get up to like 10. Now you're at 10%. And so it decreases down as you get more and more experience level. I think this slide is actually 8 to 10. That was our old ratio on there, and
yeah, I just wanted to do that. Yeah, the last week's we switched. Yep, that's correct.
So the floor rate now is 10%. The other factor with Magnolia Capital money is that we want you to have a credit score over 680. So if you have that 660, 650, we can be talking with you about how are some ways we can get your credit moved up above that 680 threshold, so you can benefit from that lower interest rate and less points on your deal. So guys, when if you have some credit issues, it is actually cash money in your pocket to be able to fix those credit issues. You can make some money on this stuff. And so it makes a real difference to beef your credit up.
Absolutely. Perfect. Let's go to the next one. And I think I touched base on this. Sorry, we've taught this class like a lot, and we talk about it every day. So we kind of blend everything together. Our draws. So we can fund your renovation budget. Okay. So what that means is you have that, let's say you have that $50,000 renovation budget. You do the work, we reimburse you. You do the work, we reimburse you. It's called, you'll get a draw. We'll have an inspector come out and say, yep, you've done the siding. Yep, you've done the roof. Here's your money back. We don't need receipts, but the work needs to be completed. Yes, you can do the work. No, we are not. We don't have to verify your contractor. We would love you to have all your wire, plumbing, electrical work by a licensed and bonded contractor, because that's just smart and would advise you to do it. But we don't.
Safer.
Yes, we don't need to sign off on it, because I know some companies you do have to sign off on it and they get paid directly. You're an adult. This is your project. We pay you. You pay your contractors on that. So, and I already mentioned that you don't pay if you don't have it out. And you can have as many draws as you want. Anything you want to add on that one, Chris?
I would just say that with us, it's a very fast, easy process for this. If you do a request for the draw, if you have a lockbox on the property, or they just call you to set up an appointment, they could be out there as early as the next day, do the report the same day, and we could wire the money out the next day. Some hard money lender companies out there are going to watch out. They'll take 1 week, 2 weeks, 3 weeks to get you paid out. Meanwhile, your contractor's like, where's my money? I want to get paid. Or maybe you haven't got a credit card and you don't want to carry that over the next month. So the draw process is really fast and easy with us. So that is one benefit working with Rain City.
Absolutely. I want to actually add to this. I'm going to kind of toot Rain City's horn on this. So Chris and I have been here long enough. We were here when COVID hit. We were here when the market was getting a little crazy at one point. There are other companies that actually have frozen draws, and we have never done that. We have always paid out. This is very important if you're, I always say, hey, talk to many people. This is a relationship. You need to be comfortable with who you're working with the hard money. You want to ask, how long does it take me to get our draws? We strive to get 72 hours from when you call to when you get your money. We will help you in every aspect you can and make sure that you get paid, because you need to be able to get paid to continue going. We would never do that. So I just wanted to kind of say, with these times that we're seeing, really ask other companies, what is your draw process like? Have you ever stopped paying out draws because of the market? Things of that nature. It's going to be very helpful for you to know that information. Someone asked, is there a cost? Yes. Is a through cost? We don't get paid for it. It's $200 for an inspector to go out, so you can plan accordingly. When, let's say, you're going to do a roof and you're doing some siding and a window, and you're going to have a draw at that point. You're going to know, okay, I'm going to have one draw. Then maybe you wait till the very end, you have two. So just budget for that. And I think there was another question on the draw.
The initial cost of having that assurance. I'm not sure what that question is. Steve, you want to expand on that one?
If he wants to go. And Stephen, if you want, if you don't want to go on mute, I talk to you offline about that, since I know we got a deal in and I want to make sure you know. There is no, I think what he's saying is there a cost to him to have that money? No, there's not a cost to have it. You can have it, you can draw at any time that you do an inspection. So if that's not the answer, shoot me a call afterwards and we'll make sure we get that sorted out for you. Okay. Let's go to the next one. Oh yeah, go ahead.
Oh, this is you, honey.
Oh, yeah. Oh, the two deals. Okay. So what we wanted to do is, because we kind of chatted about the market, where it's going, you could still be very successful in the market it is. We just need you to be wise, smart, and make good decisions. We talked about what hard money is. It's fast and it's easy. We can help you with acquisition and renovation. We actually have two, because let's be honest, listening to us talk is not as fun as seeing a successful deal done. This was actually one of my borrowers who's pretty freaking amazing. That's what it looked like before, and that's what it looks like after. He purchased it for $510,000. He put $164,000 in, and he sold it for $875,000. A nice little pretty penny that he got. He's also a contractor, so his contract business did a lot of work. So if you need a good contractor, you could see his work, and he's pretty awesome. Another one of my amazing borrowers that purchased his property 207, put only 40 in and sold it for 340. And this was recent. So another successful, fast and easy. He was able to get in and out, really done quickly. So those are the fun ones. And let's go to the next one. Go ahead, Chris. You want to talk about all the things that we have chatted about and what kind of loans we do?
Yeah, guys. So this is a slide we put in here just to tell you guys the different kinds of products that we have, different kinds of like scenarios we have financing for. Standard fix and flip. We've been talking about this a lot on this call so far. This is typically where you're buying a distressed home and you put some renovation into it, it's worth more at the end. So fix and flip loans, that's probably like 67% of our business, somewhere in that range. We also do bridge loans without reno. So if you need money for another project, or to buy another investment, you have equity in something and you want to leverage that, or you just want to purchase a property, you're not sure what you're going to do with it renovation wise, you just want to buy it and plug and play. We have that kind of loan, the bridge loan there. 30-year fixed. This has been a cool thing we've done the last couple of years. It's a non-conventional 30-year loan. We can get more into that down the road, but in essence, it's an alternative to conventional financing. If you don't fit that box, then these 30-year kind of cash flow loans can really work for you. So if you have decent credit, property cash flows, it's in an area that is, populated area, then we're good to go. We can do as many of those loans as you want, do those loans all day and do them quicker than what your bank would probably, wrestle around with that for 6 months trying to figure out how to get you approved. Cash collateral, we talked about. So that's something we can do with our Rain City portfolio line. Cash collateral is where instead of putting your money your down payment money into the deal at purchase, like you're putting it in, wired into escrow, you wired into a side account with us and we do a bigger loan with you. We finance in essence 100% of that deal. We have, your money doesn't go to nowhere. It goes into this side bank account over here. But then when you go to fix up the property, get it all fixed up, and go back to the bank for that refinance, they see this bigger loan and they're like, okay, we'll do a rate and term loan, get you a better interest rate. And we'll do a rate and term loan and refinance that entire amount in there. And we take your money that we had in that side bank account, refund it all back to you. So it's a way to kind of preload your cash out of a transaction. And this is only available through a Rain City Capital portfolio line. It's not something that's on the lower tier money. And it's definitely something that Lesa has done a lot of. I'm pitching this a lot to my clients as well, but definitely an option for you guys. Manufactured swaps. So what this is basically you take a property that already has manufactured home on it and you scrape off the one that's on there. Let's say it's too gross to renovate, you can't fix it up. You scrape it right off and you put a new one on there. So you go to the dealer and you have them, bring it out and you install it. That's called a manufactured swap. You're swapping an old one for a brand new one. We also have fix and flip loans with manufactured homes as well. Those kind of fall in the same category of standard fix and flip. New construction, you could do new construction manufactured. That's an option with us. We also do new construction on single family, multifamily, commercial multifamily, everything under the sun in commercial space. So kind of a lot of different options for you guys. I think this covers just about everything. Lesa, anything you want to add to what I'm saying here?
Absolutely. So thank you for doing that. That was awesome. This class is our Hardware Money 101 class. Our goal is to teach you what is hard money, get you a little bit of information and know kind of what you can do and what's available. Chris and I do a 102 class where we dive more into it, just because as you can see, it's already 4:45 and we still have more to teach you, but know that these are options for you. Chris and I can talk to you more. And then we will also be doing another class too to dive in of what every single one of those are, because it's kind of a lot to digest, especially the cash collateral. Right now, it's huge. If you think you might even be cash collateral or the land collateral, if you think you're going to be holding onto a property, it's a way to get your money out. And we can dive into that. These are creative ways for you to be successful. The next slide dives into the 30-year. And so I wanted to chat a little bit about that. So Chris mentioned that it's a DCR loan. This 30-year loan program is beautiful because it has investor focus. So instead of a conventional lender looks at what does your W-2 say? Well, if you got a smart tax accountant, your W-2 looks kind of smaller. So you might not qualify for the 5th property or the 4th property. We look at, just like the bridge, does the property self-sustain? Is that property making the money? Does it pay for the taxes, the insurance, and the mortgage payment? And that is what we qualify. So it's almost like a teeter-totter. Does the property pay for itself? And what is your rate? What is your credit score? And that's how we get your rate. We don't need a lot of documentation because we're looking at the asset instead of you as the individual. So it's beautiful for investors because most investors have multiple different properties. You can have more than 10. The beauty also is that you can put it in an entity. You have to put it in an entity. So I'm not an attorney. Chris and I are not attorneys. So we'll let you discuss with your attorney what you should put it in. Should you put it in your name, L Corp, C Corp, S Corp, whatever it is? Talk to your attorney for that. But this one does need to stay in it. So it's not in your name. It's in your business, which is beautiful. So I apologize. I was talking about the 30-year because I thought that was the next slide. We have as low as 7 point. Yes, go ahead. You can stay there, Greta. It's good. No, the other one. Sorry. Thank you. Is low as 7.25, which is extremely competitive. Now, all I got to say is that, as you guys know, this market, this might be what it is today, but tomorrow it might be 7.5 or 7.75. So our 30-year, it goes up and down, just like with the market. Our bridge loans are the same. It's 10 to 12%. It goes off of experience, depends on your deal. And then beautiful new construction. I would say new construction is something we offer, but we got to make sure your experience. We never ever want to get you into a loan that you can't see it through. We have less than 1% default rate as a hard money lender. The average is 8%. So let that sink in to how much that says that we want to put you in a loan that we know you're going to be successful and that we're also going to see through. So with our construction, we just need to make sure, have you done a deal before? But we can do it. We are here to help you with the ground up land acquisition. Let's talk about it. There are other companies for the land acquisition, some credit unions that give really good rates on land. You get the land, you get the plans, you get the permits, you get ready to go vertical, and then we're here to help you. So Chris and I will definitely find the loan that fits your needs for that specific project. So it's not just a one-stop shop. Chris, what do you want to add anything on that?
I think you pretty much nailed it. I think, I typically the one they're starting to get investing and they want to jump into the construction right away. And I'm like, yeah, why don't we just, let's kind of do baby steps to get there. And the only reason is because like getting your permits can be a real bear. I've got, investors right now that are doing these flips and they're like, oh my gosh, I had no idea it was taking this long to get my permits going. But imagine that for like an entire new house development. I get all these permits that you got to match up with. So we really want you to have some experience with, going through these hoops and going through the hurdles before you jump into new construction. Not to say we wouldn't do that loan if say you had you put a huge amount of cash into it and our exposure is super low. We might consider that if you had a really good builder you're working with, but generally we'd really prefer you started with something like a fix and flip or had some rental properties and kind of, in the mindset first as a new investor. So that's my 2 cents on that. Let's move to the next one.
Perfect. Oh, this is, we put this slide up so that way you can kind of see what is going on with the market. And remember how in the beginning we talked about having a plan B, and we knew that the guests here tonight would also be experienced, and we thought this might be very helpful for you. So right now we're seeing a lot of refi booms, people that have gotten into a project. It's on the market, it's not selling for what they want, and they're trying to juggle, should I keep it? Should I go into a 30-year? Or should I hold it on and do a bridge loan for 1 more year because there's no prepayment penalty? Our bridge loan has no prepayment penalty. You can pay us off as soon as you can or can't. So if you're in that situation, or if you want to think about a plan B and what that looks like, this slide is kind of for you. So this was actually a scenario that property was worth $530,000. And they wanted, their payoff was actually $370,000, right at the 70% mark. And they were trying to figure out, should I go into a 30-year loan at 8.25%? It costs 2 points. Their payment was $3,275. That's with taxes and insurance. So I want to make sure that's very clear. And their rent was $3,700. The caveat with a 30-year is there is a sliding scale prepayment penalty. We don't want to have investors get into our 30-year loans and use it as like a flipping opportunity because the rate is lower. So it needs to be, it's a sliding scale. It does have a prepayment penalty. Or you can come over to the LTV of a bridge at 65%. It's lower. So you would have to come to the table with some. The rate would be a little bit higher, 2 points, but look at the payment. It's $2,870, and it's for 12 months. And I'll just end with one because I know Chris does a really good job of explaining why this would also benefit, and I want to give him that opportunity. But the big thing here is you can choose, hey, do I want to keep it? Do I want to hold it? But if I don't want to hold it, what does that look like? And look at it. It's not that scary. It's you're saving some money and being able to sell it if you want to. Chris, you want to jump on that one and talk a little bit about that?
Yeah. Guys, this is one of the slides, and this is real life stuff for me and Lesa. We're getting these calls from some of our flippers that, they're looking at what it was ARV 3 months ago, and they put their property out there. And now they're having dropping the price, and dropping the price a little bit. They're getting nervous. What if I hold this thing? What can I do? And so we're seeing these real life options, and I think it's fascinating to conceptualize that. Yeah, a 10% rate can actually be cheaper than an 8.25% rate, because the 8.25% rate is PITI, and the bridge loan, a 10% rate is only I. It's only interest. There's no, you're not throwing in there taxes and insurance and principal into that loan. So it can get you through that time frame. So if you're in the camp of like, hey, we think this, this downturn is going to be, only going to be done inside of a year, and I'm going to be, refinancing to something else or selling property in less than a year. Great. If like, no, I think it's going to take a long time. I better just go into a 30-year and keep this as a rental. So kind of, we offer both options for you guys. This is a cool thing about the creativity of what we do is like this stuff was actually conceptualized and thought about for our clients to kind of provide solutions to challenges they're facing right now. So anyway, food for thought for those that have done this stuff before, or you're worried, what if I do these things now, what if the prices slide, 6 months from now? And I'm saying, okay, we got you covered. We're already thinking of this stuff down the road. We got solutions for you. So
Absolutely. Go ahead, Chris.
Yeah, so Rain City, guys, when I came over to Rain City a little over 3 years ago, I did look at, several different companies out there and different hard money lenders. When I came over from being my own private, just me, hard money lender, over to a company and who do I want to work with. And I really liked Rain City's philosophy of like, we're into this mutual success, real and lasting mutual success for our borrowers. And what it means is, yeah, we want to partner with you guys. We want you to be successful. We're successful. We're all successful together. And that's important that we have that mutual success. We're all about building relationships up and taking care of each other. And so I think, some of these hard money lenders that are out there, they can be low, the super low price bargain basement guys. But the issue is, a lot of times in those big, enormous companies, like you're just a number to them. You're just another client. And then they're out there, customer number 2067, and they don't care. They're moving on to the next deal. They do billions of dollars. But for us, it's a relationship. We want to take care of people. And so when things go down, things go sideways, you want somebody that's going to take care of you. You're thinking, how can we make sure you still win in this scenario? And so that's the biggest thing I think why Rain City is like, when chips are down, we'll take care of you guys. So anything you want to add to that?
You nailed it. I would definitely just say, two is everything's local. We are all here local. We have boots on the ground for every state that we're in. We know the market. We're all experts in the market. We also, live and breathe it for everyone that works with us. So it's not just someone working that doesn't know what real estate is. We're all here for you, and really truly wanting to make you succeed. And that's why we have all those options too, that as long as you keep the communication going, we will figure out a solution for you. And like I mentioned before about our default rate, we don't get the lowest rate of less than 1% for nothing. So definitely consider who you're working with, because this is a relationship piece. So that's the only thing I wanted to add to that. We are going to open it up to actually, Greta, will you do the next one? This is our information, because what we're going to do is we value your time. We said it's 5 o'clock. Chris and I, we did a good job. Look at us. Woo!
We made it.
We're trying to make sure we got everything in for you guys. If you have any questions and you want to ask us individually, there's our contact. If not, we're going to open up and do a Q&A, and we'll stay here. About 5:15 is when we do need to cut off, but we will. I love it. Love it. Absolutely.
Guys, we'll do it again. We'll see you guys next month.
Absolutely. Talk soon, guys. Bye.
Bye.